What's going on, guys? Tempo Trades. In today's video, we're going to be going over all the lessons that I learned after spending 5 figures in prop fund fees. I've been trading prop firms for a couple of years now. I've spent 5 figures and I've taken out 6 figures. So let's go. All right. So point number 1 is you need to treat prop firms like a game. Okay. When you look at live accounts, it is completely different. When you have a live account, your goal is to put 5 to 10K in there, maybe, you know, grow it, double it, whatever the case may be, get it up to 50K and slowly nurture that account over time. But prop firms is not the same. Okay. The way I look at prop firms, it is a game, and you just simply want to take out more money every month than you put in. Okay. For me, that's a win. So I kind of see a stigma out there where some people will blow a funded account and they'll say like, oh my God, I'm such a bad trader. You know, I need to reflect and look back. But man, there's people out there, let me tell you, bro, they'll spend 50K a month on prop firm fees, but they'll take out 100 or they'll take out 150. And again, just like trading, when you have risk to reward, if the risk to reward makes sense, I'd rather make, if I were to spend 50K and make 100 in revenue, so 50 profit, I'd rather do that than make 10K with 0 expenses. You know what I mean? Like, I don't care about blowing through accounts or cycling through accounts. As long as I can show myself that I'm consistently profitable month over month and I do have an edge, you can use that confidence and say, okay, I mean, you know, in January, I made a payout with 3 accounts, February, 4 accounts. I can really scale this thing up if I just keep doing the same exact thing. So again, just understand it's not the end of the world if you blow an account. I've blown an account. Your favorite YouTuber has blown an account. Everyone has blown a prop firm account before. You know, besides the uncapped phases of some firms, there's really not a benefit to sustaining an account for a super long time. Like, again, take your money, withdraw it as soon as possible, and just rinse and repeat with these prop firms. That is the name of the game. And the last thing I didn't point out is you need to be using leverage. That's the whole point about prop firms. Yes, there is a downside, or it's less risky compared to live, but this leverage stuff is insane, and you don't know when the prop firm landscape will change. We could look back on this a year or two from now, and no props are offering over 10 accounts, you know, but as of right now, you know, a lot of these prop firms, they offer 5, 10, even up to 20 accounts. And, you know, you could take one trade and make $300 and copy trade that with 20 accounts, and now you're at 6,000. So you need to be using leverage. Obviously, at the start, you don't want to just go straight to 20 accounts. You want to prove to yourself that you could be consistent and you know what you're doing. But that should always be like the long-term goal. In your back of your mind, you should always have a path for yourself. Okay, I'm going to get a payout on one account, then 3, then 5, then 10, and then 20, etc., etc. All right, here's number 2. If a prop firm seems too good to be true, it probably is. So I've gotten scammed by 2 prop firms now. The first one is my FOREX funds back in, I believe, 2023. They scammed me. And then just recently in the last year, I got scammed by Fast Track Trading. So this is a thing in the prop firm space. And again, I've talked to a couple people in the community and they'll be like, hey, this whole stigma is kind of scaring me away from prop firms and I'd rather trade my live money. But even with the chances of rug pulling and all this happening, I still think it's worth using prop firms. Again, just for the leverage, for the downsized risk. And it doesn't happen as often as you think. But, you know, there is a risk. All of these prop firms, they're here to make money. They're only going to be able to operate as long as they're making money, then they're giving out. That's just how the world works, and that's just how they work. So, you know, I got scammed by 2 firms. It wasn't the end of the world. It taught me a lot of lessons. You need to, you know, you can't be putting all your eggs in one basket. If you're trying to buy 5 accounts, I wouldn't just buy 5 Top Step accounts. You know, I would try to buy a couple Top Step, a couple Bull Knocks, a couple Take Profit Trade, or whatever you want to do. That way, if anything happens out of the blue and one of them rug pull, you don't have to start from 0. You know, you still have other accounts, and then you can grow your others while that's happening. Right. Point number 3, pass evals quickly. So this may be a controversial one, but I don't take a while on evals at all. I've gotten to a point where if I can get a funded account, I have a really good belief that I have a good chance of getting a payout. So for me, it makes absolutely no sense taking 2 to 3 weeks to pass an eval, right? I could be on a funded account taking those same exact trades, getting closer to a payout. So for me, I go very, very aggressive. Now, you know, depending on where your financial situation is and where your experience level is, you may not be able to do this just yet. You know, if you're a beginner, take it slow. Use the eval phase as kind of a practice phase to build some confidence. But once you start seeing consistency, consider going more aggressive to save time. You know, I'd rather blow through 3 or 4 evals and pass them in 1 or 2 days than only buy 1 eval but spend 2 to 3 weeks on it. So that's just me personally. And with that, I'm able to scale very, very quickly. I'm able to consistently get payouts because I always have funded accounts ready to go. And that's just how it is, man. You know, the 1 day passes, the bull knoxes, the apexes, you know, the 1 day passes, I just full port. You know, I wait for a good setup. It's not like I'm just blindly taking a trade. I'm still waiting for a quality setup, but I wait for a quality setup. I full port, win or lose, pass or fail, and I move on. With the 2 day passes like Top Step and My Funded Futures, it's a little bit different because, you know, with your percentages, if you're a math guy, it's not as consistent, obviously. If you need to win 2 full port trades in a row, you're going to have less success than 1. So with the 2 day passes, I don't full port, but I definitely still go aggressive. I'm still trying to pass it in the 2 days as short as possible. So that's just a word of thought, and that's how I personally approach evals. All right, so I think this is tip number 4, but I get this question a lot. Building a cushion in your accounts versus taking money out. Again, this kind of goes back to point 1. If I always tell people, if it's your first payout, I would 100% take the money out no matter what, even if it means blowing your funded, okay? Because for me personally, when I was about to get my first payout, I had a lot of debt with prop firms. So my main goal was to get even, you know, get to that even marker. For months and months, I was in the red. So when I got a payout, I just wanted to take that money out to try to get back to even. So that should be your goal. You know, if you have an Apex account and you can withdraw 2,000, but if you do, you're going to blow it. I would do that no matter what, no questions asked, especially if it's going to get you back in the green with prop firms. So that's number 1. Once you're not on your first payout and you're kind of on your following payouts, it's a debate you have to have with yourself. I typically like to leave a 5 to 7 trade cushion in my prop firm account. So whatever you risk per trade, you could times that by 7. That gives you a healthy cushion where even if you go on a little losing streak, it's not the end of the world. And, you know, it also depends on the prop firm specifically, right? If you have a prop firm like Bullnox or Apex, they're really easy to get, you know, easy to pass, whatever. You could take money out as much as possible. But once you have a firm that's like Take Profit Trader, where it's a 5-day pass, you might want to leave more cushion in because it's a pain in the neck to get back to that funded stage. So, you know, those are some things you need to take into consideration. But again, take the money out. Down the line, you can debate whether you want to leave a cushion in or not. Also, remember, it's always a risk with these prop firms, man. I mean, if you leave a $50,000 buffer in one of these accounts, if they rug pull, you know, a couple months from now, you're going to have a really tough time. So it's always that balance, and you'll figure that out. You'll know what to do. All right, guys, my final tip will be take advantage of sales. So in the prop firm industry, these companies are fighting for your money. You know, they're constantly one-upping each other, constantly making the rules easier or harder, and trying to get your customer service. So they're going to offer some crazy shit. You know, this firm might have a buy one, get one free. This firm might have a 90% off. And you always need to take advantage of that, especially if you're trying to be, you know, cost efficient. You're trying to pull more money out than you're spending. You need to be taking advantage of sales, okay? For example, Bullnox has a 90% off sale right now. Bullnox has a 90% off sale, and you might sit there and you're like, I don't need any prop firm accounts right now. You know, I have 5 accounts over here and 5 accounts over there, but 3 to 4 weeks from now, you don't know what the hell your accounts are going to look like or what position you're going to be in, you know, and you might want a sale something like this 3 to 4 weeks from now. So you always need to be thinking ahead, you know, grabbing a couple if a prop firm's on sale just to store, you know, they rebill monthly so you can let them sit. And sometimes, you know, some of these firms, they rebill at the sale price. So even if you have 5-10 accounts, if you see a crazy opportunity, just stashing accounts, worst case scenario, 2 to 3 weeks from now, you blow all your current accounts, you have a reserve, and then there's not that downtime of, you know, trying to rebuild yourself back up. So highly recommend you take advantage of sales. You know, there's so many different things out there, man. There's straight to funded, end of day drawdown, trailing drawdown. You need to find what works for you, what works for your personality, stick to that, and then just try to scale up month over month. So, and that's going to be the end of the video. So that is what I've learned after trading prop firms for a couple years. Like I said, I still think they are a very, very good tool, especially for beginners, to build confidence, gain some wealth, and even eventually, you know, get some payouts and build money for a live account. You know, I do think one day I will go live, but until the, you know, until the rules get worse, maybe until there's a lot more scams, I'm still going to take advantage of the opportunity it's presenting. We never know what the prop firm landscape will look like in the future, but I would take advantage now. It's really good. Take it easy. Peace.